Welcome back, everyone, here to Live Now from Fox. I'm your host, Mike Page, as we continue to bring you the top stories and headlines from all over the country. Well, we are in a new year. Great, doing great. So I'm glad that you could come on today and give our viewers just some insight of not only what you're seeing in Arizona, but really across the country for as trends. So we know you handle Arizona. First off, how's the market in Arizona right now?
Well, it's interesting. And I think, we're seeing a lot of the same trend across the country. And pretty much everybody knows how it's been going the last couple of years with a shortage of inventory. And that trend continues into 2022. And we use a source called the Cromford Report, which is a really good source of data here in Arizona. And basically what it's telling us is in December, we had a historic low of inventory, like the lowest on record. And we're starting off 2022 with that low of inventory. And historically, starting off the year, we typically see a large increase in listings with buyers staying kind of at bay until February. And so it's still a little too early to see if that's what's happening right now. However, it didn't happen last year. So that gives us a good indicator of, an unbalanced market still, where we call it a seller's market. But we'll kind of see how things go moving into the year. But right now, inventory is still looking pretty low. And so it's tough for those buyers out there.
Yeah, because maybe explain to the viewers there just how fast you have to be, and really, what about cash buyers? It seems like they always have the upper hand then when it comes to some of these properties that they want.
Well, absolutely. Because cash buyers, with a cash buyer, you have no issues as far as an appraisal goes. So the home doesn't have to appraise because there's no lender involved who's looking at a value and as a liability. So with cash buyers, they're coming in and they're able to waive any inspection issues. They're able to waive appraisals, and they can close really quickly because we're not waiting on a lender. We're just waiting on a title search. So typically those are way more appealing for a seller than when we come in financed. However, we've got a lot of great, strong finance buyers in the market too. As we know, the difference between a 2008 loan and now is that it was a stated income back then, and typically they were giving loans to anybody and everybody. So now you really have to go through quite the paper trail to be able to be approved for a loan. So a lot of people were thinking we were in a bubble and that the market's going to crash because of what's been going on, rising home prices, low inventory, but we really don't see that happening because of the strength of the buyers right now. And we've got, a big influx of cash, and, Arizona is very desirable as far as place to move. So, we've got great weather, and everything is relatively newer and lots of development, lots of opportunities here. So I think we're going to continue to see this for a while. And as far as a finance buyer, I think really go in prepared. Make sure that you've got your finances in order. Make sure that you've talked to a lender and you've got your pre-qualification letter. And really a good conversation to have with your agent is to go through and talk about, what's expected as far as requests for repairs. How much do you have in reserves in order to do repairs if you're not able to really ask for those to give you that upper hand advantage when you're buying? So, I think as far as the finance buyer goes, the key word is preparation and going in and making your offers, and move quick. Things are going quick.
Absolutely. And you talk about how Arizona really highly desirable, especially right now when you look at some of the weather that we're seeing in the Midwest and the East Coast. They have to be looking at our weather. We're going to be seeing like 70 degrees today, and they're going to be getting hit with snowstorms after snowstorms this weekend. And then we also have really the big events coming up too. Barrett-Jackson coming up at the end of the month. The next month we have the big Phoenix Open. Do you see those big events that happen in Arizona in January or February? Do you see that people that come here visit and say, hey, I don't know if I want to go back to New York or Michigan. I kind of want to stay out here. Do you get new type of buyers or that are interested coming off spring training and stuff like that?
Oh, absolutely. And, it's just, we are a state that has a lot of we have a lot of residents here that have two homes. We've got people that come in the winter and then they leave in the summer. That's probably our biggest second home market is when we've got, people visiting for the winter months, because you can't beat it, right? 72 when there's snow everywhere else. So we definitely see that. And, people coming for the holidays, visiting family once they get here, not wanting to really leave. So I think, those things definitely influence our buyer market, and that's about to happen. So historically, like we were talking about before, that seems to happen constantly. We do get more buyers toward the beginning of the year. February, March, that seems to be the hot season historically for real estate. It's a little different right now. I feel like we're, hot all the time as far as the real estate market goes, and the desire to be here. So currently right now, the typical price for a home, the median price is about $420 to $425 for a typical 1,500 to 2,000 square foot home. So that's, we're going up about 28% as far year over year as an increase in price. And so, we're still below a lot of the other markets, especially in California and some other places, but we're rising quickly. And, it's just our desire is showing for sure.
Absolutely. And you talk about those home prices that increased last year for the homeowners. They must have been looking at, and they're like, wow, that jumped up really, really quick. Can we expect the same in 2022? How is it projecting right now for increases? Is it looking like another 20% increase?
Well, right now, we are continuing that trend because our supply is so low and our demand is so high. So, we're unbalanced there, and we've got a really high demand and a low supply, typical to drive those prices up. So that's what we're seeing. It's kind of leading into a conversation about interest rates and what's going to happen there, because how long can we continue this for, and what's happening to the first time home buyer, especially, our kids that are coming out of college and looking to buy their first home. How does that work for them? Because it doesn't put them at the highest advantage anymore. Like, they used to have a pretty fair shot at it. So it's challenging right now. It doesn't mean it can't be done, but lenders are tending to take our lending limits and raising those as well. So we've got, the 6% inflation that's going on, and what are they going to do to combat that? And it's really just those interest rates we're going to see a steady increase, probably 2 to 3 times this year. And we've already had our first one. So, it kind of looks like that's how we're going to have a little bit of fairness put back into the market for those that are looking to buy, and they're not quite at that $500,000 level just yet.
Right. And for those maybe that don't want to sell and they're looking at refinancing, is this one of the last opportunities to refinance to get a rate, or should they have already have done that maybe last year?
Well, in talking to some of our lender partners, it looks like the refi boom is over now. So, when we were seeing mid to high 2s and low 3s there for the last year and a half or so. And that was great for sellers because you've got, your equity going up and you've got your interest rate going down. So who wouldn't want to take advantage of that? So everybody jumped on that bandwagon. And what we're seeing is a lot of people taking cash out. So whether it's to pay down debt, to do home improvements, to take vacations. So it was a really cheap way to borrow money. And because you've got that increased equity, now you've got that room to be able to take that money out and do those things with. Whereas now, interest rates are on the rise. People anyone who's going to do that really has jumped on the bandwagon. So now the name of the game, I think, for lenders this year is just going to be a focus on purchases. So yeah, I think that ship is kind of sailing. We had a huge boom, and we're not going to see at least a boom. And now if we do see people refinancing, it will probably just be to decrease their, monthly payment instead of taking that cash out that they were doing before.
Absolutely. And I'm glad you brought this up too, Nikki, about for people maybe just getting into the workforce, getting out of college, and you're seeing these home prices that are continue to rise. And then, how would someone just getting out of college, you think, be able to, how much would they have to save up? Let's talk about that a little bit. How much would they have to save up for a home? do you typically have to put the 20% down, or can you do less? I think a lot of people like to know that stuff.
Well, I think for FHA buyers, which would be, if they don't have another home or it's their first time buying a home in a few years, they would qualify for an FHA loan, which is helpful. And the good news about that FHA loan is you can have a minimal amount down. I mean, there's some programs where you can do 3% down, you can do 10% down, you don't have to have that conventional 20% down. But what that 20% down does is it gets rid of your private mortgage insurance, which is a little bump in payment for typically the first 7 to 10 years of your loan. So you are getting rid of that by doing the 20% down. But, as a first time home buyer, you don't have to have that in reserves, which, that's a lot of money for somebody who's just graduating and starting out on life's path. So, the good news is too, with the FHA loans going up, they are now going up to $420,000, $426.80, which is up from about $356,000 last year. So we've got a good bump there of about $65,000 as far as giving them the ability to afford a little bit more now. And then our conventional loans are going up as well. So, if you've got a conforming loan, now we're going up to about $647,000, whereas last year we were around $548,000. So we've got a bump of about 18% there. So that's exciting news for affordability. And, of course, it's still getting your paperwork in order and having to prove where you're at financially, but at least, it really helps out with what you're able to afford now.
Yeah, absolutely. Absolutely. Every bit helps there, no doubt, especially when people are just starting out. Nikki, let's talk a little too about people that what we're seeing a lot is investors just coming in. There was some reports there that you might not even know who your new neighbor is because they're actually not moving in. It's just an investor, and they are going to be renting that out. How prevalent now do we see this where investors come in, they're not going to even be staying there, and they're just using that to, do short-term leases or vacation rentals?
Yeah, so there is a lot of that going on. And because we were a more affordable state to be able to buy those types of homes in, we attracted a lot of investors, and now, since our median price is increasing, it's making it a little bit more challenging for investors to come in and swoop up a bunch of homes and do that with. And then we've also got the regulations of HOAs, which some of them, put the kibosh on the short-term rentals like the RBOs, Airbnbs, that kind of thing. But long-term rentals, you do still see a lot of those. What's going on right now too, another piece that's put into place to be able to help our primary home buyers is that both the closing costs, costs in general, as far as getting a loan for a second home or an investment home, are going up. So, and the rates are always higher on those. So we are seeing also lenders that they've put a cap on lenders being able to lend to those type of buyers. So I think it's 7% of their portfolio can be second home and investment homes, and the rest of them really need to be primary buyers or primary homeowners. So there is some things put in place to kind of put the brakes on some investors right now. So we'll kind of see how this year shakes out. Of course, there's all these variants, COVID and the effects that that's going to have, and the financial market meetings that'll be happening and where those are going to go. So there's lots of variance, but it does look hopeful for some primary home buyers as far as interest rates rising a little bit and putting the kibosh on some of those investment buyers that are coming in that are not cash buyers.
All right, great info, Nikki. And then lastly, for tips for people that say 2022, this is the year we are going to buy a home as a family, what tips do you have for them? Is it something like be ready to move fast, or what are some of your tips?
Yeah, so I would absolutely say do it. I think right now is a great time to buy. It is competitive. So, as long as you're prepared, I wouldn't deter anyone from looking for a primary residence. And, we don't know what's going to happen in the future, but right now I can't see prices falling a whole lot at all. If we get some more supply, like typically we do, not sure about that yet, but if we do, then I can't see prices falling a whole lot, but maybe staying, evening out. plateauing a little bit more. So I think it's a great time to buy. I don't think that you should wait because we are not predicting prices to go down anytime soon. So it's best not to really wait and see what happens with, our equity going up so quickly. And we've got a lot of renters right now too. And the cost to rent versus the cost to buy really year over year, when it's typically right now, it's about $72 more to own a home than it is to rent in your monthly payment. And that over 5 years, you've made a pretty good investment there if you're buying versus renting. So I think it's always best to be a homeowner if you can, as far as the tax advantages go too. You can't beat those. So I would definitely say go for it. Be prepared, narrow down what you want, look at certain areas. And if there's certain neighborhoods you really have your eye on and you really love, those you need to watch daily. So just be ready to go.
There we go. Nikki Sabetta Brooks with the Glass Sabetta Team at North&Co. Thank you so much, Nikki, for giving us some great insight for the year ahead and what to expect as a new home buyer.
Thanks so much, Mike. It was great talking to you this morning.
You too. You too. All right, everyone. We'll be right back here with more Live Now from Fox coming up in just 2 minutes.